Okay, so this was my first trade. BBIG, I only shorted 100 shares. And as you can see, it was the 21st. And I shorted at 8.15. So right here. So normally when you have these kind of market conditions, when everything basically grows 300, 400, 500% pre-market, you know there's always going to be this pre-market push. So like here, then it's going to drop. And then you know for sure, especially if it's a low float, you know that most likely all these Robin Hooders and all the noobs, they pretty much gonna buy the hype, and they're gonna spike the stock right in the morning from the open. So what you want to do, you want to wait for this spike. And so I waited for the spike at 8.15, and I think right here when it dropped the first red candle, I shorted 100 shares. And I only shorted 100 shares. Actually, I reserved over 1,000 shares, but my strategy is I would get a decent average on this bounce. So let's say if this spike was not the final spike, if there's a second spike, I would short remaining 900 shares. But as you can see, there was no spike, and I just basically followed my statistics. I only had 100 shares short, and that was it. And I exited at 585. So right here. So this trade made me around 250 bucks. Nothing huge, but it was pretty solid. Okay, so the second trade on this week was, the ticker is EDSA. So the same pattern, as you can see, there is a huge overextension from $5 pre-market all the way up to $12. Unfortunately, well, if you see these kind of overextensions, it's kind of hard to short them because the range is already huge. So it's very risky unless you're trading super small size, like a few hundred shares. So I know that from the open it's gonna drop, right? But I still need some kind of a spike so I can size in to bring my average price to a suitable level. So when it drops, I actually make profit, given that the average low percentage on these kind of drops after this extension is around 22%. So this is what happened. I didn't have any shares to short pre-market, and then as soon as market opened, the stock basically tanked from $9 all the way down to $7.50. I didn't touch it because the stock has already fallen like 10% or something. Let's see. Yeah, around 10%. So the risk reward, my risk would be $12, and my reward is 22%, which is not ideal. So in my mind, I'm waiting for a spike. So this is exactly what happened. EDSA, I shorted 300 shares around $8.23. So right on this spike, when stock went to 8.23, my average was around here. I shorted 300 shares, and I exited when the market faded. The stock faded down. I don't remember how much I made. Let's count. So 300 shares, $8, and I exited at 7.26. So roughly 80 cents on a share, and I had 300 shares. So again, I made around 250 bucks on this setup. It was pretty solid. Okay, so this was the third or fourth trade. Also pretty solid. There was a nice extension. It was a very low float stock. The ticker is EXPR. So statistically, I've been tracking the pre-market highs, and then you compare the pre-market high percentage to how far the stock opened on the current day. So let's say pre-market high percentage is 150 on my average, and the open given that it spikes pre-market and then it opens, so around 100%. So basically you have these 50% that you can take. So that's the basic idea of my setup that I've just discovered roughly 2 months ago. So Expr, I saw this nice 150% gain pre-market. I shorted on the second red candle, so right here I only shorted 150 shares, and then right when market opened, the stock basically tanked. And then I know that at some point there's gonna be a spike. I call it intraday spike. So what I did was I shorted another 150 shares on this spike right here, and so as you can see here, 150 shares at almost 8, and then I was basically adding at 6, and I was adding at 602, so around $6 a share. I was adding, and then I closed it at, let's see, 585. So right here, so I got this spike, brought my average a little more up, but it's okay. So I closed it with the profits, and I think I also made around, I don't remember exactly, around $300. Okay, so this was by far the craziest trade ever, because normally you don't see a huge spike pre-market and then pre-market drop. Normally that doesn't happen in these market conditions that we're seeing right now. But on this trade, it happened today. I just got lucky. So what happened was I shorted. First, I was shorting 250 shares. All of these shares were located around $3.20 to $3. So 320 to 3. So right here, as soon as I saw that this spike didn't break through and it was denied, and I saw this big depreciation here, and stock was already up around 500% pre-market. So I knew it was gonna drop. I mean pre-market and the previous day, so I knew it was gonna drop. And I know that the average open for these kind of stocks is 100%, and average pre-market is 150, so it was no brainer for me. I shorted it here, and ideally I would wait till market opens, and I would short more shares on the spike. But the problem was there was no spike, so basically it went from here, it went all the way down to 140. And actually, let's see where I exited. So I was shorting 150 shares here and 1550, around 320, and I exited at 155. So I bought these shares back at 155, so like right here. So as you can see, you don't necessarily need to short like 1,000 shares, or 500 shares. Sometimes if you trade pre-market, if you know it's gonna crash, and you have all the data, all the statistics on your side, you can basically short 200, 300 shares, and this will suffice for you to make $300 or $400. And then you make $300 or $400 every single day, and at the end of the week you make $2,000. So it's not, these kind of small trades add up at the end, and as you can see, just by these simple setups, you can make pretty decent money. Alright, so that was it for the video. Thank you guys for watching. Subscribe to my channel. If you guys have any questions about the entries or how to find these, just write it in the comments. I'll try to explain everything, and yeah, see you guys next time.